Good evening. Thanks so much for tuning in. The latest update is that the Union Budget has, of course, been presented, and in it, the government has detailed its plans to spur the economy to greater heights. And while all of those announcements are very significant in the larger scheme of things, individuals like you and me pay more attention to some of the other details that has to do with the taxation of individuals, taxation of income that we take home. And a lot of us hang on to every word with the hope that there will be some exemptions, some deductions, and even maybe a reduction in the tax rate. None of those things came to pass. In fact, the headline and the buzz that surrounded the personal finance aspect of this budget had to do with the taxation of digital assets. Cryptocurrency as well as non-fungible tokens, among others, will now be taxable at a rate of 30%. There were a few other announcements that were also made by Finance Minister Nirmala Sitharaman. We'll get into all of that in a lot more detail. Let me introduce my guests. We've got Monika Halan, author and Adjunct Professor, NISM. We've got Swarup Mohanty, Chief Executive Officer of Mirae Asset Global Investments. Avinash, Shekhar, who is the Chief Executive Officer of ZepPay. And Rajesh Gandhi, who is partner at Deloitte India. Later on the show, we'll also have Nilesh Shah, Managing Director of Kotak AMC. But let's talk about the biggest budget headline, and that has to do with the taxation of digital assets. Rajesh, I want to come to you first on this one, because let's first understand what the nature of this taxation is. How does this work so that my viewers are all on the same page when we start discussing the implications of this?
Right. First of all, thank you and good evening to everyone. And as usual, this is a budget of hits and misses. But coming straight to your point about taxation of digital assets, I think, and now we have the benefit of the fine print in the last few hours. So I think the way digital assets have been defined in the finance bill is in a very broad sense to certainly cover crypto assets, anything which is traded through crypto means, bought and sold, as well as non-fungible tokens. So NFTs have also been included in the taxation umbrella. Now, in some sense, as you know, this was certainly expected, though NFT taxation may not have been. But the taxation, I think, has been done in the harshest possible manner, if I can say in a way, because crypto gains will be taxed at 30%, not as capital gains. So you don't get the benefit of any offsetting of other kinds of capital losses, etc. You can't offset any other income. You can't get any other deduction. It's not also like a business income. So it's a straight sale consideration minus your cost is what will be taxed at 30% plus surcharge. Plus, to track crypto transactions, there will also be a TDS of 1% which the exchange or the platform has to withhold when they redeem your crypto assets. And also, if you're gifting crypto assets to someone else through some of these platforms, the recipient will be taxed again at 30% on that gift income. So clearly, full taxation on crypto assets expected to some extent, but quite harsh in some sense. But I must also add, one more thing, is that some people also see it as a good news, in the sense that if the tax law is providing for taxation of crypto, in some sense, it also means that the government is kind of, giving a blessing through the tax revenue for crypto transactions.
That is one of the biggest talking points, whether it is, in fact, legitimizing cryptocurrencies as an asset. But what you said in terms of the harshness of the tax, I want to get in Avinash on this one. Avinash Shekhar, Chief Executive Officer of ZepPay. Avinash, this is something that a lot of cryptocurrencies exchanges were talking about in the run-up to the budget, that perhaps it's a better idea to tax cryptocurrencies rather than do away with it or ban it entirely. But do you think that this is going to be a bit of a setback in terms of the utilization of cryptocurrency?
So actually, दो तीन चीजें हैं इसमें. There are 2-3 things. One is that we have to understand that the crypto was never illegal in India. Crypto was, was and is legal. Okay. And second is that crypto was always taxable. It's not that the crypto gains were not taxable. But as Rajesh said that the clarification or the tax which the government is now saying 30% and 1% TDS, which is higher than what we were expecting, obviously. But I think it's a step in the right direction. It creates a baseline for the crypto industry. And as it's a new industry, there is any clarification, anything which moves the things from gray to white is a welcome step from the government. So I think for us, and for the industry, it is going to be a positive news. Another thing which we are missing, I think, is that uh, we all talk about traders and we talk about exchanges, okay, but there is an underlying industry which has the potential to become significantly bigger than the exchanges and the people who trade in crypto. The underlying technology and people or the techies in India were and are slightly reluctant to enter into this industry and contribute towards making crypto technology India a leader in the crypto technology. So that hesitation, I think, and that, there will be some clarity there that it is a legitimate asset class where you can innovate, you can contribute towards the GDP of the country, you can contribute towards the tax collection of the government.
Avinash, I take your point on that. But I do want to get in Monika Halan on this. Monika, you've written extensively on personal finance, and this dates back to the time when people talked about equity as perhaps a little bit of a risky asset and wondered whether this is something that they should get into. Cryptocurrency is another ball game altogether. In a sense, the government saying that losses that you make on the selling of cryptocurrencies will not be set off against any other asset. In a sense, the government saying, all right, you can buy cryptocurrencies, but we're not necessarily encouraging you to do so. Is that how you would think about it? And where does crypto fit in, according to you, in somebody's personal finances?
You know, Alex, my views on crypto are not popular. I get trolled all the time, but here are my views, and I don't think it's of any surprise to anybody. But if you look at the way the government is taxing crypto, it is taxing crypto like it taxes lotteries. So lotteries in India are taxed at 31.2, 30% flat plus cess. So I would imagine the cess will come onto this taxation on virtual digital assets. I think we should stop calling them currencies, and this is something I've been saying for a long time. Currency is issued by a government. If we think that a private digital token can replace fiat currency, we are all mistaken. So this whole rush towards what was called and marketed, and famous people marketed this token, this gaming token, and thought that it was going to be the fiat currency sometime. I think that that debate has been put to rest because the government is taxing it like it taxes a lottery. So to the extent that you want to buy a lottery ticket, sure, go ahead. But I am still going to hesitate a long time before I understand what the underlying to this asset is before I think of a long-term or a short-term capital gain on it. So I think the government has given a very clear direction as to how it views this and how it is going to tax it, and announced that the only fiat will be announced by the Reserve Bank of India. We are not saying that blockchain is not useful. Of course it is useful. We are not saying that there's no space for a digital currency. Of course there is, but who is going to own it? It is going to be the government of India, not a privately held code, Alex. That's where I stand.
Very important point that you're raising in terms of the introduction of the central bank digital currency. This is something, remember, that has been in the works for quite a while. Swarup, I'm coming to you next, and not necessarily to comment on crypto and whether you believe in it or not, but in terms of the underlying infrastructure, if you're talking about blockchain, this is something that's going to be used in the CBDC as well. So from the perspective of an investment avenue, do you think that this is something that will play out in the coming short term? Do you think that there are avenues that can still be discovered by the mutual fund industry, for example?
Yeah, Alex, thank you for having me on the show. Yeah, it's a very interesting time, and when you look at the events that have happened, and there was this physical asset regime when Indians used to invest only in physical assets, and slowly post-demon, exactly the rise of the financial assets. And here, from a budget perspective, we are first of all acknowledging the presence of digital assets. So, the taxation to it would be the first step of acknowledging their presence. But simultaneously, the introduction of the digital rupee is also one step forward from our thinking perspective, or the existence of this space from a legitimate perspective. I am of the opinion that wherever there is money, there should be some amount of regulation, there should be some amount of taxation. How it plays out, I think Monika has put it in a very objective manner. If you don't do that, then money more often than not does not behave in the right manner. So this is a big thing that has happened from a budget perspective. I think, as you rightly said, one of the biggest highlights. The mutual fund will look at it from a structured perspective. If there is a regulated, structured part of it, then the mutual funds will enter. Otherwise, they will not. And I think the regulator is very cognizant of this fact. And hence, if you see in the last few days, all the funds which were up for approval have been put on hold, and rightfully so. I suspect that the mutual funds will operate more on the blockchain side rather on the crypto side, and that's my personal opinion, because we filed on the blockchain side. But yes, it will be very interesting to see the technology unfold. I think one of the things which I think Mr. Avinash pointed out is that techies now warming up to this side to explore more avenues will be a welcome change and I'll watch that space very interestingly. It's a very interesting point which he pointed out, and this will probably be the trigger. My son's a techie, so I talk on that part. And if that happens, we will see a very structured part of it coming, and how it will play out in the next 4 or 5 years will be very interesting to watch.
Let's take the conversation a little forward then, gentlemen. Rajesh, just a small point on cryptocurrencies before we move to some of the other announcements that were made on the tax front. One provision, or rather one statement that was made in the fine print, was that irrespective of whether this is a transaction in kind or in cash, the TDS would have to be deducted. So can one interpret that as saying that if you have a Tesla moment, of course Tesla has gone back on the idea of selling Tesla vehicles for Bitcoin or other cryptocurrency, but is that something that you can interpret as the government saying, look, we don't really want people to transact in this?
Right. So I wouldn't necessarily say it's a way of discouraging trading in kind, but I think this follows what some of the other TDS or withholding tax provisions follow. Is that whether you get income in cash or in kind? And by the way, they have done similar an amendment for another provision where one person provides a benefit to another person as part of his business in kind. And there's a new section introduced, I think it's 194R, which says that there should be a TDS even on that situations. So I think it's more to do with the whole framework of withholding taxes, where even if you don't receive an income in cash but in kind, there has to be a withholding because there's an income after all. So I think it's more to do with that rather than discouraging transactions where you exchange your cryptos for a Tesla. And of course, there's no regulatory framework in India. We need to first get that introduced for using crypto as a currency.
I want to come back to you on a few other announcements that were made. Perhaps we'll run through them because not really big ticket in that sense, right, Rajesh? If you talk about the surcharge on LTCG on all assets being capped at 15%, I think this is more to do with those that fall into the higher tax bracket where you're talking about surcharges that went as high as 37%, right? And a few others where you're talking about provisions for updating the filing of your return 2 years from the assessment year. Could you take us through what stood out in terms of clarifications, in terms of changes in the tax law?
Right, absolutely. So surcharge, yes, definitely stood out because, as you rightly said, today the 15% surcharge is only for listed assets and listed mutual funds. Now you get the benefit even for all your unlisted long-term capital gains. So which means in relation to your investment in startups, in manufacturing, in unlisted bonds, you get a lower rate of a lower surcharge of 15%, which brings down your effective tax rate. So I think certainly that is welcome and it helps industry and investment. And then there have been some other amendments, some of which were industry asks. For example, the startup incentive, new manufacturing companies, 15% tax rate, that should be extended further, because a lot of these PLI schemes have been introduced in the last 1 or 2 years. So industry wanted that to be extended, which the finance minister has obliged to. But I think that period of extension, which is only 1 year, to my mind is not simply sufficient, because as you know, it takes a lot of time to set up your manufacturing, right? First of all, to decide on doing manufacturing and then getting your land, your licenses. So it does need a lot of time. So probably she should have done it extended by 2 or 3 years rather than 1 year. But nevertheless, that's a benefit given. The other thing which stood out to me is on this gift city, which a lot of people talk about. It's a nice fancy thing to talk about, but as a consultant, I do see, especially in the fund management industry, a lot of activity taking place, especially in the last 6 months to 1 year, where a lot of domestic Indian fund managers and few foreign managers shifting their funds to the gift city. Now, one or two changes which brought my attention. One is that if you're a bank and you are based in the gift city, then if you issue P notes from the gift city, the foreign investor will be exempt from tax. So in a way, it is, while the government had discouraged P notes at the Mauritius Singapore level, here there's slight amount of encouragement there and a nudge for shifting that P note business away from Singapore, Mauritius into the gift city. And second was this whole arbitration game which happens in Singapore for a lot of Indian deals, that has been encouraged to be shifted in the gift city. So that is something else which stood out to me in terms of the amendments.
I'm coming to you, and I'm sure that you've had a lot of conversations in the run-up to the budget as well as to what people were hoping for. And usually there's a significant gulf between what people hope for and what is eventually announced. We've seen this pan out over the course of the last several budgets where there is a hope for deductions, exemptions, reduction in tax. Do you think there was scope for more to be announced, or do you think this is par for the course?
Oh, certainly. And I think as with any budget, there have been misses, as I said.
Sorry, Rajesh, this is not for you. This is for Monika.
I'm sorry.
Yes. See, I did not expect the finance minister to announce any increase in deductions, exemptions, or rebates, because there simply isn't space to do it. So I did not expect her to do it, but I think there is a quintile of population which needs a little bit of handholding relief, which is the 20% of population right in the middle. Part of that 20% does come under the tax net. Part of it is purely informal. That part has hurt very badly, and I was hoping there would be some relief, even if it was just a 2-year holiday in their PF contributions, that would have put money in their pockets. So little disappointed. Yes, you did not have space on the fisc, but you could have withheld their PF contributions for 2 years while the employer went on with his contributions, just so that they could have money to tide over this period. So a little disappointed with that, Alex.
It's a fair point. I want to also come to you, Swarup, in terms of some of the other announcements that were made. And I want to zoom out to a certain extent, because I think this is important to do as well. I'm not saying that one should change their investment philosophy simply on the basis of what was announced in Budget 2022, but perhaps it gives some perspective as to how one should follow. As a watcher of industry, as a watcher of the implications of what the government does on capex, on infrastructure, what do you think is going to be the focus area that an investor into equity should focus on heading into the new financial year and into the years that follow?
Alex, when you look at equity, there are two types of investors. One who look at investing directly into the market, and one who take the mutual fund route or hire a fund manager for them. And recently there was third part which is emerging, which is, the passive investors who buy the market at large based on the various indices that are offered to them. Now, if you are a direct investor, then you need to think of the various opportunities that come up in various budgets and be a little more, decisive on that. But if you're a mutual fund investor, then the fund manager is the right person to take these decisions. And this budget has thrown up a host of areas through the capex route, which can definitely give a lot of opportunities for rejigging in the portfolio. At the same time, the banking, which has been a house call for over a year now, looks very attractive from here on. So from a mutual fund perspective, investor, I would sincerely request you to stick to your asset allocation and the amount invested in equity, Indian equities. Let it be, because India, all said and done, with budget, without budget, is on a growth track. And that there is nothing that this budget has taken away from that. In fact, when you look at the constraints under which this budget is being prepared, and I somewhere agree with Monika that the non-mention of COVID and its impact was a little bit of disappointment to me personally. In spite of that, what it has put on the table is very good on its maths. I see a realistic number for the first time over the budgets, and most of the numbers, I think, will be achieved through this budget. So from that perspective, the markets will discount it today and move on from tomorrow. And thankfully, the global markets have come back over the last 2-3 days, which were a little subdued. So it will be market as usual from tomorrow, and then this will be put behind very quickly. So stick to your asset allocation, stick to your overall goal and plan. That is more important. And if you're on course of that goal and plan, everything is okay.
Everything is okay. I think that's the message that people will take from this. But Swarup, thank you so much for joining in, for giving us that perspective. Avinash as well, for your views on cryptocurrencies. Wish you all the best. Rajesh, thank you so much for joining in and for giving us your view on the big changes that were announced.